Quick hits, part of the show where I talk about three things that have been in the news that that many of you may have seen. First one, Nvidia chip stocks were popping off, as we say, moving a lot higher after Foxconn. Now, Foxconn is the largest contract electronics maker in the world today. They are the largest assembler of Apple products in the world, and they made a lot of money this past quarter based on AI servers and the whole AI boom. And so when they did well and they announced a pretty good number, all the tech stocks, the chip makers in particular, went significantly higher. The second one, Trump denies report that his team is eyeing a pared back tariffs. There was a report out, I believe, of the Washington Post that Trump would consider not going through with his extensive tariff bill or what he wants to do with tariffs. But he has said that that is not true. Santa Claus rally. Did the Santa Claus rally happen this past year? Quick answer, no, it didn't. But there's a reason for that, and that's okay. So let's get to the first one. First quick hit on Nvidia. As I said, we have an Nvidia chart here. And you can see that Nvidia really moved higher at the start based on the last few days, based on Foxconn's earnings. And as I said, you could extrapolate this to many of the chip makers. AMD moved higher, Micron moved. Anybody, any company, or most companies, I should say, that were or are chip creators, makers, producers, anyone in the semiconductors really benefited from Foxconn and what they had to say. We've seen tech stocks, especially chip makers, fall in the last day or so. And that's more on the macro. That's more on the idea that U.S. economy is showing strength. And because of that, there may not be as many interest rate cuts this year. And so that has brought down some of the tech companies. But make no mistake, Foxconn giving us a very good indication that data center, AI, is definitely booming and moving forward. Second quick hit, Trump denies this idea, this thought in the Washington Post, I believe, that said that maybe he'll only put tariffs on certain products coming out of Canada and Mexico. Our next chart here, one of my favorite charts, very colorful chart. You could see how much total value of U.S. goods imports in 2023 by country. Mexico, biggest, 475.2 billion. And you have followed by China, and then Canada. We were the third biggest. And then you have all the other countries, Germany, Japan, Korea, Vietnam, Taiwan, etc. And then the rest of the world, 1.1 trillion. So obviously, tariffs has been the talk. And if the president-elect, the new president coming into office, goes through with his tariffs, not only will it affect us here in Canada, but it will also affect the U.S. as well. Our third point, third quick hit, Santa Claus rally that everybody waits for, looks for at the end of the year. Unfortunately, it didn't happen. And I believe for a good reason. And that reason simply was the gains that we normally had at the end of the year, they just came earlier this year. They came in November, beginning of December versus the end of December. And that's okay. You know, as I said on earlier shows, if we could squeak out a 1 to 3% or 1 to 2% gain on the markets, I'll take that for December to end a really good year. And we have a chart. I love that picture of Santa riding with his reindeer up the chart, up the S&P 500, riding it higher. We have a chart, S&P 500, and that shows Santa Claus rally at the end of 2025 really wasn't much of one, fizzled out towards the end of the year. So three quick hits, three things that perhaps people have seen in the news that I wanted to touch upon, and three things that, again, you know, when you're looking at your portfolio, what does it mean? Well, hopefully I've shed some light on the meaning of three quick hits that we're seeing in the news today.